Hello, good morning, good morning. Happy Wednesday. Happy National Mom and Pop Business Day. I had no idea that there is a special day today, March 29th, to celebrate the small business owners. So Happy National Mom and Pop Business Day. Learned about that this morning. And if you're just popping on, well, first of all, if you're watching the recording, feel free to skip ahead to get to the content. And when you pop on, let me know who you are, where you're from, so I can say good morning to you. Oops. Okay, almost there. Y'all know how I do. Okay. So good morning. I want to welcome you to the Daily Revision Morning Show. My name is Lysandra Everett and I'm your host. I am here Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about several things. And hey, good morning, Shantae. And right now in this season, I'm answering a lot of tax questions as I am a tax professional. I'm an enrolled agent, enrolled to practice before the IRS. And it's tax season and people got tax questions. So I want to say for the last 2 weeks, every day I've been answering tax questions. But today's question is about why business owners don't get refunds. And I've been getting this question a lot, especially since I have small business owners, just whether it's a network marketing and sometimes it's independent contractors who are just getting into the space of owning a business, and come tax time, they're surprised that they owe money. So I want to talk about that. Okay. And wait. So the last time I also shared on this topic, I had some people really come for me because they felt like I was trying to destroy their business or something. It was crazy, but okay. So here's the deal. When it comes down to being an employee, when you're an employee, there are taxes that are taken out of your check. Okay. Generally 28 to 30% of your check is taken out and put towards taxes. Okay. So that's taxes that is paid into the government system. That's your contribution. Okay. That is what that is. So your taxes are taken out of your paycheck before you even see it. Okay. Now, when it comes down to owning a business, you pay taxes after you pay everything else. So you have your income, you deduct your expenses, and what's left over from that is profit. And whatever profit you have, you pay taxes on it. So you pay taxes after the fact, not before. That's the difference. So unless you as a business owner prepay your taxes or overpay your taxes, you're not going to get a refund. All right. Most people get a nervous feeling about owing the government, and rightfully so. Okay. Because the IRS is one of the longest reaching arms of the government. But understand this too, because this time of year, people talk about how much they hate the IRS, they hate taxes, they hate all this. If you hate all that, please look at who your representative is, your congressman, your senators, because that's who makes the tax laws. The IRS is just the enforcer of said laws. Okay. That's that extra little tidbit there. But here's the thing. When unless you overpay your taxes, you're not going to get a refund because you're paying taxes on the profit that you make. That is why you will not get a refund. Now, if you get a refund and you're a business owner, it is because you have operated at a loss. You cannot continually operate at a loss and still expect the IRS to consider you a business, because the IRS is saying to you, okay, listen, if you're continually losing money, how are you living? How are you actually in business? That does not make sense. It does not make mathematical sense, and it doesn't make sense. And so that is what will trigger an audit. For you to be considered a business, you must be in profit 3 out of the 5 years. Okay. When you are just getting started out as a sole proprietor and all of that, if you're at, have an S corporation or a C corporation, that's something completely different. I'm talking about my folks that are right here at the kitchen table getting their businesses started. Now, the IRS, when you get started, they expect you to lose money. Okay. They really do. But if you're losing money that third year in a row, that's going to raise a red flag to the IRS to say, okay, we need to be looking at something different here, because this business is continually operating at a loss, yet they're still claiming these deductions for business expenses, and this isn't making mathematical sense. All right. So now, if you have one spouse, if you have a two-person household, two-adult household, where you've got one person that is working a regular job, and then you have another person that is building a business, if that person has enough taxes taken out to cover what you owe, then you might get a refund, but it won't be because of your business. Okay. That's just not how this system is designed to work. It's not that owing the government is a bad thing. It is not being able to pay the government that is a bad thing. Okay. So when you're running a business, one of the things that you have to do with your income is set aside money for taxes. And I generally, as a rule of thumb, say 25 to 30%. Set aside that amount of money for taxes, because at the end of the year, after you subtract all of your deductions from your profit and all of that, if you owe, then you already have money set aside to pay what you owe. And if you wind up not owing anything, if you happen to zero out, that's fantastic. You have money set aside. If, somehow you wind up, between you and your spouse, wind up getting a refund because you've overpaid taxes, that's fantastic. But understand that a refund is not money that the government is giving you. A refund is the money that you have lent the government interest free for a year. Okay. So you have overpaid your taxes, and now they're giving your money back to you. So this is not some free money that is coming from the government. This is the government giving you your money back. All right. So I want to make that clear that, it's the thing about business. Excuse me a moment. My throat's getting kind of scratchy. The thing about business is that it's really easy to get into. Okay, it really is. If you decide today, I am in business selling scissors, just because that's what I'm looking at. Okay, great. You're in business. That's all you need. And you go to work. Okay. But the thing about it is that business is easy to get into, but you really have to know some things on the back end of things. And that's where the tax professionals and the CPAs come in. I come from a network marketing background, and there's lots and lots of people that are available to tell you how to make this money. But what they don't tell you is the backside of things, of how to manage your money. That, if you go and ball out, that you're probably going to have to write a check to the IRS. I've seen too many of my clients who are network marketers who have made lots of money. Okay. And then they're upset because they've got to write a check to the government. And, their response is, well, I didn't start this business in order to pay taxes. They told me about all of these deductions and all of this stuff. And, and I have to explain to them that it's two different things. Deductions and paying taxes are two different things. Yes, you get these brilliant deductions. You pay taxes on your profit, not all of your gross income. You pay taxes only on your profit. And so if you're showing that you made $11,000 profit for the year, you're going to have to write a check, especially if you have no dependents, you don't own a house or anything like that. You're going to have to write a check. So so this is why I'm cutting this video and, having this live broadcast and really talking about this, because this is the part of the business that people don't talk about when you're getting in. All right. There's lots and lots and lots of ways to make money, but who's really telling you the back end of things, how to function on the business side? It's great to make the money, but you got to know how to manage it, how to track your expenses, and all of these things that really don't come, with the starter kit. Okay, that part don't really come with the starter kit. So, I really hope this answers your question for you to understand exactly why it is business owners generally do not get refunds. The only time you get a refund is if you're operating at a loss, and you can only do that before so long before the IRS really comes knocking at your door to say, excuse me, we need to see all of your records because something about this doesn't add up. All right. So going forward, if you're just getting started in business or if you haven't been doing it, when you get paid, how you get paid, whether it's monthly, weekly, daily, whatever, set aside 25 to 30% of your income for taxes. Okay. There are other parts of your business that you have to pay for, but all of those things might be optional. Taxes are not. Taxes are not an option. Okay. So if you have any questions or if you need some help, I specialize in home business owners. I come from the home-based business industry, and now I've started my tax practice in my home. Okay. Because I'm really tired of us being in trouble with the IRS in the home business industry, okay? Because there's a lot of us, and we really got to work on fixing that to put us on better financial footing. So there's a link in the comments to book a tax consult. Simply click on that and set a time, and we'll get together and see how I can help you. Okay, so that's it for me. I hope you got some good information out of this live video. Make sure you subscribe so you don't miss anything, and I will see you next time. Bye.